everyone. My name is Jesse Day. I am the host of Commodity Culture, a YouTube show and podcast that interviews prominent investors in the commodity space. I do focus a lot on the precious metals and gold, and we are going to be talking gold stocks today with Paul Harris and Jeff Clark. So before we dive into it, I will ask both panelists to give a brief introduction and maybe also let us know why you're bullish on gold equities here in 2023. Starting with yourself, sir.
Okay, good afternoon, everybody. I'm Paul Harris. I'm the America's editor for Mining Journal. I also do bits and pieces for Kitco and other media outlets such as Mining Stock Daily. I've been in and around the mining space for about 25 years now, mainly focused on copper and gold. I think it's a great setup for gold this year and the precious metals in general. I've heard a lot about that this morning from people that know far more about it than I do, but the US dollar weakening, gold doesn't have the same headwinds it's had in recent years from crypto or cannabis or other things. So I think it's looking pretty good outlook for the year.
Hi, I'm Jeff Clark. So worked with Mike Maloney for a long time. So still work with him some, but I'm primarily over at my own site now, thegoldadvisor.com. So tons of content there. So as I showed in the, okay, is that better? Okay, thank you. As I showed this morning, gold stocks, and that chart I showed was the first time we've ever showed that cycle. And there's been 8 very distinct cycles in gold stocks, not gold, but gold stocks since the 1970s. And the last up cycle was the bounce out of COVID. If you remember that, there was a lot of gains in a lot of mining stocks then. And since then, it's been in a down cycle. So after a down cycle, you have an up cycle. So it's so predictable when you look back at this history and see they just do this constantly. It doesn't tell us when it's going to start, how big it'll be, how long it'll last. It just tells us that there will be another up cycle. And I think we're probably on the cusp of that. So maybe a little pullback here, and then we'll be off to the races.
So now why don't we get into your stock picks? How many stocks do you have that you want to present to us today, Paul?
I've thought long and hard about this. I've got a short list of 4.
Okay, perfect. So we'll just go, you can go ahead and go through all of yours first, and then we'll move over to Jeff for his picks, just being mindful of the time to make sure both you guys get a chance to get in all of your picks, and take it away, sir.
Okay, well, feel free to kick me off if I'm droning on too long. Okay, given that we're sort of starting into, let's say, a new cycle, gold cycle for the stocks, gold stocks were hit quite hard last year, and even the sort of blue chip stocks lost anywhere from 25 to 50%. Some of the juniors, more speculative stocks lost even more. So I think we're in general terms, stock prices are at a very low level, and therefore the potential upside is very significant. I'm going to start off with some more advanced, developed stories. None of these are producers yet, but I'm going to start off in a safe jurisdictions as well. So in Canada, here in Canada, in Quebec, 2 things that really stand out to me are Cisco Mining and Troilus Gold. Cisco Mining's got the Windfall deposit. They've got 4 million ounces in measured and indicated at average grade of 11.4 grams per ton. They've got a feasibility study. They're looking at producing around 300,000 ounces a year of gold. It's a team that's proven mine builders. They've been through M&A cycles before successfully. They've created a lot of shareholder value. They've got a great asset in a great mining jurisdiction, looking to do it again. For me, this really is a standout potential for mergers and acquisition. A bigger company is going to buy this project. Also in Quebec and further to the north is Troilus Gold with the Troilus Gold deposit. They've pretty much got an entire district. Again, they're around 10 million ounces at a 0.8 grams per ton gold. They've got a feasibility study coming out later this year. They've also got a big or significant copper kicker in their deposit. They're looking at around 250,000 ounces a year of production. Again, it's a team that's built mines and operated mines in the past. And given the scale of this, again, I think it's another candidate to be bought by a bigger mining company. Now, moving down into the United States, into Idaho, I really like Revival Gold. They're a smaller proposition in a way, but they've got 4 million ounces in all categories. They're working on completing a feasibility study in the first half of this year. They're at a historical mining site, so there's a lot of infrastructure already in place. So the amount they need to invest or whoever ends up taking the project forward needs to invest into bringing their Bear Track Arnett deposit online is quite reasonable and modest. I mean, you're potentially looking at less than $100 million. They've got an open pit heap leach startup project. Will produce anywhere from 70 to 100,000 ounces a year. But they've also got the potential for a much bigger sulfide project in later years. Again, very, very good management. They run a very tight ship. They've brought in a lot of experience. They've got a mine building team in terms of their employees and their board. And my final pick is a more speculative one. It's an early stage exploration company, and it's also in a riskier jurisdiction. And what I've got here is Collective Mining, which has the Guayabales project in Colombia. I live in Colombia, so I keep a close eye on what's going on here. And they've had a really good discovery at their Apollo target. It's a gold copper or copper gold. Still in the early days, but they're stepping out and they keep hitting, they keep growing. A recent drill result, 426 meters at 1.51 grams per ton gold equivalent. So this is looking like it's going to get really big. And again, it's a team that's done it before. The team behind Collective Mining is the team that gave us VRIC, the big gold mine that was Continental Gold had and subsequently sold to Zijin Mining. So again, very experienced team. It's built mines, it's operated mines, and then it's sold it. And it's looking like they're probably going to have a chance to do something similar again.
So first for me is, and anybody who follows me will probably know some of these picks, but the first is, these are just in alphabetical order. First is Benchmark Metals. And all these companies are here, by the way, the 5 that I'm going to name. So the reason I like Benchmark is because, like you're saying with some of yours, this is a high confidence buyout target. Already got 3.5 million ounces in all categories, pro-mining jurisdiction, strong management, good grades, and what management is basically doing, I thought when I met them at Beaver Creek that, hey, you guys are going to be bought out pretty soon, right? Like, actually, no, we're going to pull back and we're going to develop this to make it even prettier for a major to come by and get this. But 3.5 million ounces with good grades in a pro-mining jurisdiction, this is exactly what a major is going to look for. And in the meantime, they said in 2023, they're going to go out and start aggressively drilling again to actually grow the deposit, not just clean it up and develop it and get it licensed and permitted and all that. So there's going to be 2 things going on with the Benchmark this year. For me, stock's way undervalued. It sold off a lot last year. It's way undervalued, so the entry point is very good right now, and I'm just going to hold this until it gets bought out because, like I said, I have a high confidence level that it will get bought out. And then second for me is, if you know me, you know I like Cassier Gold. I've actually been to the Cassier Gold site. I was on an analyst tour there last year. Really like this company a lot. I called it the geologist playground because the thing is so big up there. They have so much land. I'm standing up on the mountain at Cassier South looking down, and I can barely see the other end of the property. It's so big. So there's tons of exploration to do here. There's tons of targets. There will be a lot of aggressive drilling this year. But in the more immediate future, they have several drill holes that haven't been reported yet. So there's going to be a lot of assays coming out from Cassier here. And they will... the ones that are coming out are both Cassier North, which is a bulk tonnage target, and then they have the Cassier South, which is a high-grade deposit. So we're going to see both bulk tonnage things, and we're talking 150 meters in length in these intercepts, along with the high-grade intercepts. So Cassier Gold is a major buy for me. Next is a little going on down the ladder a little bit is P2 Gold. P2 Gold in British Columbia, these are the guys that were part of Pretium. It's P2. I really like the assets. I've been to the BAM project up in British Columbia again. We flew around in helicopters. That was a lot of fun. I got to see Bullwinkle, the moose there. Anyway, this project, they came out with a resource estimate. And it was about 500,000 ounces. The grades are okay. But what they realized from doing this was that there's not just probably a feeder system that's going up to this, but there's probably a porphyry underneath this. And as you might know, porphyries can be very big. So they're going to be testing that this year, and that could be very exciting. And then they have another project in Nevada they're going to be looking at. But there's a two-pronged approach there. I really like those guys. They've been very successful. They have millions of dollars of their own money invested in this company. Next up is Scotty Resources. Oh, we got time. This is a fairly new add to the website. I like Scotty Resources. My theme with Scotty has been, this is a project that is growing and looking more and more like it's going to be a mine. And it's going to be a project, it's growing, and the market's not noticing this. So 6-8 months ago, I noticed they were putting out high-grade results. Then a month later, they put out more high-grade results. Then a month later, they put more high-grade results. I said, look, I got to talk to you guys. Long story short, I like the asset. It's growing. It's the Blueberry Contact Zone is what it's called at the old Scotty mine. So this is a brownfields project, and it's growing. And this is probably going to be a mine. The grades are good, so it's still undervalued despite the good progress that they've made. There's going to be more assay results coming out soon, and then they'll start drilling in the winter. And I might be up there this summer too. And then last is Snowline Gold. Anybody who knows me knows I like Snowline Gold a lot. This is a company that actually Keith Newmar was kind of part of the incentive to put this company together and getting it going. This is a huge asset that is up in the Yukon. I've been there. You can read the report free on the website. Anyway, it's in the Yukon. It's very remote. There's no infrastructure, but they're hitting high grade and long intercepts. It's really rare. You usually get like you'll get a high grade hit, but it's a narrow vein, right? Or you'll get a long intercept and it's low grade, more of a bulk tonnage target. They're getting both. They're getting both high grade and mega intercepts. Mining Explained just put out their own report, and this is their opinion. It's not official, but they think there could be, just in the one zone, there could be over 5 million ounces. So infrastructure all of a sudden becomes a little bit less of a concern when you have that many ounces, and that's just one project. And I've been to that project, I've seen it, and they have other projects around. This might not just be a new district, this might be a whole new gold camp. So this is a big project. So when you see the stock selling off, this does not mean anything to me. I'm reassured actually you can get it cheaper when it sells off like that, because the potential there is huge. So I like it a lot. I think it's a nice long-term hold. Even though it's in remote Yukon, it's a great long-term hold. So there you go.
Great, thank you very much. We just got a couple minutes left here, so I just wanted to ask, because a lot of these CEOs are here at the VRIC, and a lot of mining company CEOs are here, so I'm wondering, when someone's face-to-face with a CEO, having a conversation and wants to learn about their projects and the company, what are some of the key questions that investors should be asking? And maybe if you could just take a couple quick minutes each to let us know what you think. Go ahead, Paul.
Okay, well, first off, I'm glad that we didn't have the same companies. And following up on Jeff's last one, Snowline Gold's got some of the drill core there, and it's well worth having a look. I think, given that, I would say just ask whatever, even if it's a basic question. if you're potentially thinking of putting your money into a company, a CEO should give you the time of day, treat you with respect, even if you don't come from a deep knowledge base. If anybody that doesn't do that, that's a huge red flag. But you should be asking them about what they see their potential risks are, what the key challenges they have to overcome. It could be finance, it could be metallurgy, it could be putting the land package, the surface rights together, it could be dealing with the First Nations or whatever. Ask them what their biggest risk or fear is. Every project's got something that really needs attention, and it behooves everybody to really understand what that is, because that's the risk element.
Excellent. And Jeff?
So I think everybody in the audience knows you always start with the people, right? You got to have strong people that aren't just experienced, but they've been successful. They've successfully navigated a bear market or a downturn or a problematic asset before. That's what I really like. Now, it does mean that I'll miss the occasional high flyer because it maybe isn't someone who has a lot of experience and they happen to get a good project. But when you're investing in the junior mining sector, it's already one of the most riskiest sectors in the world that you can invest in, right? So I don't want to add to that risk by going into a war-torn part of Africa or a gentleman who may be a nice guy, but his last company was a marijuana farm. So I want someone with successful track record who can navigate even the worst of the assets. And so one of the questions, and a good starting point if you don't know management, is what did the stock do under your last tenure? Your last company that you owned and ran, what did the stock do? That cuts right to the chase, because we're all investors. We want to know that they're going to create shareholder value. And the answer to that, and you can even research that before you even talk to the CEO, go look up who they are, look at the companies that they ran before, what did the stock do under their tenure? And you'll find that 9 times out of 10, if they don't have a good track record, that is probably not a good investment. So I like to look at that. All the companies that I'm heavily invested in, they had to pass that. I made them pass a criteria questionnaire, and it's on the website. You can read it with all these companies. But that's what I do. That's what I look at, and it helps me reduce risk, because I love this sector. I love investing in junior miners. That's why I wrote the book. But I want to reduce my risk, and so that's one starting way to do that.
Great. Well, thank you very much,
Can I just
gentlemen?
add
Absolutely.
something as well, because this comes up time and time again, and I'm sure you've heard it in the presentations and the companies you've spoken with. Pretty much every junior, sooner or later during the conversation, will say they're undervalued. For me, that's easy. It's lazy. Anybody asks you to that, I'll return the question, what are you doing to build value? You say the jurisdiction's great, the valuation's great, you got the money in the bank. If you're undervalued, doesn't that mean the CEO isn't doing their job? Because that is their job, building value. So I would always push back on that. If you think you're undervalued, what are you doing to fill in that valuation gap?